Welcome to the NEOS Monthly Income Podcast. I'm Tom Lydon, and each month we're joined by the founders of NEOS, Garrett Palella and Troy Cates, who help us focus on the importance of maintaining a healthy, monthly tax-efficient income stream. Gentlemen, Happy New Year. Great seeing you.
Hey, Tom. Great to see you as well, and Happy New Year.
Happy New Year, Tom. Good to see you.
Guys, it was a good year for both equity and bond markets, and investors and advisors have done some positioning for the new year. You guys talk to advisors all the time. What are the most important things advisors are considering regarding portfolio construction as they look at this new year?
Yeah, Tom, as we've come into the end of the year, we're always having conversations with investors. And I think really as the discussions suggested and we gathered from all walks of different types of investors, really positioning for durability coming into this new year. I think everyone is very cautiously optimistic. I think the Fed, and obviously from a political standpoint, those are the key drivers and considerations really in the portfolio discussions, less so around macroeconomic. I think a lot of investors were feeling more comfortable about where the economy was, the ability that we did see some easing within interest rates, job markets still looking pretty strong. But of course, I think there's a lot of concerns around spouts of volatility, and unknowns coming from the current administration, or what is the data ultimately going to suggest, as we did see a lot of backlog data come out towards, Q4, given the government shutdown. And so I think it was really around how do I position my clients for what we hope, right, is going to be a follow-on strong year within the equity and fixed income markets, with potentially continued easing within interest rates for the fixed income side of the portfolio, but a big discussion of how to reset and get that extra income that is needed in the portfolios as rates do come down. But if we start to see equities be, slightly higher, flat, slightly higher, how do they take advantage of generating that kind of tax efficient income while still being positioned to have that equity allocation? So really interesting conversations. I think excited for this year overall. I mean, people were generally positive across the board, but certainly building for that durability of, unknowns that could happen and shocks within the market, and playing to that volatility being a helpful benefit, within the portfolios, for kind of the longer term estate plans.
Garrett, you're right. And Troy, there's always saber rattling that's going on out there politically, especially. But I think the average advisor is really trying to focus in on that right balance between risk assets and income strategies. What are some things that, in addition to what Garrett shared, advisors might be thinking about?
Obviously, everything Garrett was saying, but they're really thinking about, what is volatility going to do to their portfolios throughout the year? So they're thinking, can certain clients weather that volatility depending on age or income needs or anything like that? And, as they start to build those portfolios for their clients or update those portfolios for their clients, they're thinking about, what could bring that volatility? Yes. Is it another, like we saw last April, a tariff announcement? Is it something that might be going on with the Fed that we've seen the recent news about? Or is it more Fed rate cuts coming down the road? And what might the Fed share position look like come May when Powell steps down? And so thinking about all those things and everything else going on when you're thinking about a specific client's portfolio and what their overall, risk appetite is, what their income needs are, what they're trying to do if they need to live off that money. There's a lot for an advisor to think about. And we're always happy to have those conversations, at least from our perspective, of how some of the NEOS products might help in different scenarios.
So for advisors and investors that are ETF fans, Garrett, we spend a lot of time picking out what we deem to be quality ETFs. How do you do versus the competition? But there are other steps, which is how much do you allocate to each, number one. And then most importantly, getting to the subject of this podcast, the tax efficiency. In a few short weeks, NEOS is going to be reporting the tax efficiency of the NEOS ETFs for 2025. Talk a little bit about that and the importance of understanding that tax efficiency aspect.
So I think when we're talking about asset allocation with investors, it really comes down to a couple of things. One, yes, certainly cash flow needs as a whole, but a lot on what is like the broader estate planning goal. And those advisors are guiding us on what their clients are really looking to achieve. And so that we can help show examples and work through on a consultative approach in order to really assess what allocation percentages, would make sense for the advisor to choose, how to ultimately target certain, risk levels or income, thresholds. And so definitely that's something that excites us and we spend a lot of time talking about. When it comes really to the tax efficiency, yes, our fund accounting and audit firms will be sending out, the 1099s to all the brokerage, channels in the coming weeks here as they follow, due course in the overall process. But I think for us, our approach to really tax efficiency isn't just at year end. It's throughout the entire year. How are our models assessing the investment instruments we can use? So what options do we trade? How do our models ultimately from an investment approach, make rebalances and changes within the ETF structure to focus on not only that total return, but that net after tax return and income. And so I think for us, it's consistency and it's stewardship of focusing on that throughout the entire year, which is not just a year-end process. And so even as we've already started the beginning of this new year, we're looking and assessing our models and how those, approach on making changes within the portfolio, because we're big believers of not just waiting to find out at the end of April, what your net after tax return is. Were you expecting a 10% yield or income off of a certain investment, but by the time you get down to it, you realized half of that was paid out because it was all ordinary income, relative to more approaches like Neos takes that we're looking to really drive tax efficiency in multiple layers. I know we've talked about this in other podcasts, but the return of capital from a tax standpoint is a really powerful opportunity for investors to take advantage of. Very similar to almost how that views within an IRA, being able to make changes and not getting assessed taxes when you make those changes in the portfolio. So there's a lot of ways to ultimately look at it, but I think investors really need to be approaching what that net after tax return is for the gross risk they're ultimately taking in an investment. And we spend a lot of time talking about that because that's something that happens on a daily basis here, not just at your end.
So, Garrett, you're absolutely right. And with all this, you folks have been really fortunate to build the Neos investor fan base this last year. And with that being said, a little bit of news. Obviously, Troy, you're excited about the award that you won last year for QQQI, which was the winner of the best new active ETF by ETF.com. And now the news is out that you've been nominated for Best New Options Income ETF with the Gold High Income ETF IAUI. Talk a little bit about that because gold's been on fire.
Yeah, no, we're very excited about this. So IAUI, we launched that last summer, so June of this past year. And so we've had a good 6 months or so to watch it grow, watch it participate in the market. And in IAUI, we're thinking about what we're doing there and how we have long exposure to gold through one of the ETPs and also synthetically, and then bringing the income in through the GLD option contracts and still getting that 1256 treatment through those flex options. We're very excited about this nomination and the potential of watching it continue to grow. So it's been nice to see the assets come in and the performance that we've seen over the past 6 months doing what we built it to do. So it's exciting for us. It was exciting last year with QQQI, and we're very fortunate to get another nomination with IAUI.
Almost $300 million in that short period of time. Pretty impressive. And for investors that are looking for gold allocation, but also that high income, it's something to consider. I think a brief ask for listeners and fans of Neos, you can actually help in this regard. So if you go and Google 2026 ETF.com awards, you can actually vote, and we'd really appreciate your vote and spread the word. So thank you so much. Garrett, we also have some news about the distribution calendar. I think most investors with Neos really like at the end of the month being able to see in their account the distribution that shows up. But you're making some changes to balance that out. Talk about that if you would.
Sure. So we're excited about this change for 2026. I think as our lineup of products have grown, and we're deeply appreciated for the investments that our clients have made and our partners, we've also noticed that the products have all had the same distribution each month. And so what we've done for this year is we've actually separated into kind of 4 suites of products. So you're going to be able to, as you own a more diversified portfolio of NEOS, those product suites are going to be able to be distributing on different weeks each month. So we're going to get the hedged equity income in 1 week. We're going to get fixed income in another. We're going to get the high income that a lot of people are invested in another week. And then obviously a newer product set and suite that's coming out, our boosted series, will kind of be in another subsequent week. So depending on how you diversify across the NEOS products, you can start to ultimately get distributions on a weekly basis from us if you own the different, categories and allocations. So we're really excited about that. I think it smooths out the ability for, our fans and our great partners to be able to, obtain distributions, more consistently throughout the month instead of, all at once.
And Garrett, part of that is you're finding from shareholders and analysis and advisors that they're not just buying one NEOS ETF, they're kind of spreading it across the different suites, right?
That's correct. We see that across actually all demographics of our partners, and so the advisors we've been talking to have been holistically building portfolios with us to increase that kind of cash flow across the entire asset allocation. But we also see that with the investors that come direct to us, as well. So it's been great to ultimately see the diversification, and I think that's something, regardless of NEOS and our products, we always preach, right? It's that durability that we love to talk about and that diversification. You never know how equities, fixed income, or alternatives are going to perform over the course of a year. And as you think about that income part of your portfolio, having that have a diversification across asset classes, exposures, risks, right, just continues to allow the investor to have consistency, that durability, which is something we really, love to kind of talk about and ensure that clients feel comfortable, because no matter what, hopefully that doesn't keep you up at night, thinking about, what if I'm all invested in equities? What happens if the equity market, goes down 20% tomorrow?
Hey, want to do a quick deep dive on an ETF that's gotten a lot of attention, MLPI, which is the MLP High Income ETF. Troy, what's an MLP and why are they tax efficient? And talk a little bit about MLPI.
Sure. No, MLPI, we were really excited to get this one out in the market. We launched this in the middle of December. So we have a short track record so far, but the assets have started to come in, and we've seen the growth of the ETF early on. So we're really excited about this product. MLP is a master limited partnership, which basically is really focused around the energy sector and tries to marry up and pair up the tax efficiency of a partnership and the liquidity of a publicly traded stock. So when you have these MLPs, which, there's not a ton of them out there anymore, a lot of them have merged over the years, but we wanted to build an index that had access to these MLPs and energy infrastructure names and put this in an ETF wrapper where you're still getting a 1099 at the end of the year. You're not getting a K1. So a lot of people think of an MLP, you got to deal with a K1, but within our ETF MLPI, you're getting a 1099. And then of course, we wanted to add the option income component. So to do that, we're trading AMLP flex options, do the flex options for that, quote unquote, flexibility of changing the strike, changing the expiration, and really changing the settlement from, say, an American settlement, which stock could be called away, more to a European where it's cash settled. So we build this product where we have this long book of MLP and energy infrastructure names. It's usually in the 24, 25 different underlying holdings. And then we're using those AMLP options to sell calls per our rules-based model to bring in that extra income and then distribute that out along with any of the dividends and distributions we're receiving from the underlying holdings. So it's been a great product. While it's only been out for a short amount of time, we really have seen a lot of demand for it, and we're looking forward to 26 and seeing how that grows.
Well, guys, you're not sitting on your hands. Garrett, I know as we start this new year, you're very optimistic, but also you're working hard to continue to communicate with advisors and investors, listen to what they're looking for, and you've already come out of the gates with some exciting new products. What would NEOS fans maybe be looking for in 2026?
It's always been the investor first. It's what do they need with their portfolios? How are they viewing the markets? And how can we really aid them in a tax efficient income allocation? And so as we continue to just listen to what everybody talks to us about, what we're excited about for at least the start of 2026 is coming out with our new boosted series. And boosted really means that you're going to add a, reasonable amount of leverage into exposure of SPYI, QQQI, BTCI. And so that if you think about kind of that equity allocation, with NEOS today, you have the core, which is SPYI, QQQI, and BTCI. We have hedged versions of those. Now you're going to get a boosted version. And the idea is that you want to ultimately be resetting that exposure. So it's about wealth building long term. It's not about a daily traded product. These are not, for you just to go start whipping around in a portfolio. The idea is to make an allocation for those ones that want a slightly higher octane exposure, because as we all know, covered calls reduce volatility and cap some of that upside exposure to generate current income. Well, if we can institute what we're saying is a boosted version, it's going to, seek to add additional income to your portfolio, an additional total return. And so that those investors that are looking for a little bit higher octane allocation can choose the boosted version, or at least cycle through the three as, their estate planning goals or thoughts on the market change from a boosted to the core high income or our hedged, equity income. So we're really excited. We've heard that a lot from the marketplace, liking what we do within our cores, but would also like to be able to get more exposure, in a variety of different ways with us, and trying to have that optionality for clients.
Well, gentlemen, we tackled a lot today. And as always, for NEOS investor fans, if you have any questions or if you have any comments, please let us know. And good luck in 2026. Gentlemen, thanks so much. We'll catch you next month on the podcast.
Thanks, Tom, and thanks for everyone for joining.